Good afternoon, Campbell McCrary here, Amvest Capital in New York City. Welcome to the Amvest Capital Inc. live webinar with E2Gold Inc. E2 trades on the venture as ETU, Echo Tango Utah, and not in the US yet, but hopefully that will change. And we hope you'll enjoy today's program. It will be available in replay mode about an hour after we wrap up, and you can get advanced copy at amvestcapital.com/replays. And during this session today, please send in your questions and we'll ask them of Eric and Ellie Owens. With that, Amvest is a New York-based specialist investment management and corporate finance firm focused solely on the natural resource sector. Please note and read this carefully. This call is for informational purposes only. Very pleased to have with us today Dr. Eric Owens, and he is the president, CEO, and director of the company. More than 30 years of experience in the resource industry, and has 3 million ounces of gold under his belt. The discovery with Alexandria Minerals, less than $17 an ounce, in fact. He's also been at BHP, Newmont, Echo Bay, and Intrepid Minerals. And we have Ellie Owens, Vice President, and joining us today as well. And following, again, the presentation, please share your questions and we'll ask them in real time. And when you log out, please share us your feedback. So Eric, if you want to turn on your webcam, we'll get started.
And gotta find.
Okay, we're in. See you in about 15-20 minutes.
Okay, thank you, Campbell, for inviting us back here again, and Adam, your presence as well. As Campbell indicated, Ellie and I are the vice president and president CEO respectively of E2Gold, as many of you know. We've got a great little company here, a fairly new company, completed our IPO just at the end of last year. Managed to raise about a little over $3 million on December 31st, as of December 30th, actually. And we've got our first drill rig on site as of early February, completed our first drill program on this project, which we call the Hawkins Project. So we've been very aggressive at moving forward. We really don't want to let a lot of grass grow under our feet. We followed up that first drill program with a $5.6 million financing, which we just completed, helped out immensely by the people at Amvest, Campbell and Adam and their group. And we ended up raising a lot more in a fairly quiet market, in a market that was a bit iffy. We were able to raise about 50% more than we anticipated. That has given us a lot of money to be able to go forward quite aggressively with our follow-up program. So we ended up drilling. Our first program was really kind of a first get-to-know-you program on this project, the Hawkins Project, which I'll show you a little bit more about here in a minute. But it's interesting, the resource that starts us out at Hawkins is 6.2 million tons, grading 328,000, or grading 1.65 grams per ton for 328,000 ounces of gold, all at surface in the upper 150 meters, open below and along strike, is based upon 40-year-old Falconbridge drilling. So there's been very little work done on this property before we started drilling on this. So our first round of drilling was really aimed at trying to make sure we were satisfied with the Falconbridge drilling, to confirm their higher grade zones within this resource, and then finally to locate this properly, because our new drill program is aimed at stepping out and stepping down to quite deep levels to test it at deeper levels in the crust. We want to decide where the footprint of this thing is, and how big can this potentially be. And so that's our real goal with our current efforts that we've already started this summer. Just before we get there, a little bit about myself and Ellie. Ellie and I are the co-founders of the company. We have, as well, along with my wife and Ellie's mother, co-founders of the company. We have raised, as we said, 5.6 million. We see the share structure situated here. We have 95 million shares roughly issued and outstanding, or issued anyway. Market cap at about 12 cents is about $11.4 million. Of interest is that insiders hold 15%, so it's still fairly tightly held. Funds hold 17%, and high net worth individuals hold 23% of the existing shares. So it's fairly tightly held. We do seem to have pretty good volume these days, and on a daily basis in terms of trading. You know, a few 100,000 shares a day these days. It's kind of hanging in there. So we're pleased with the way it's going, and we're very pleased with the recent financing. Ellie, would you like to talk a little bit about the project location?
Yeah, so just a bit of a refresher for and an overview for those who are new to E2Gold. You can see the Hawkins Gold Project there outlined in orange. It is located in north central Ontario, just south of the Trans-Canada Highway, the CN Rail and Algoma Rail lines crisscrossing the property there. There's a road that goes down from Hearst down to the local community of Oba. So lots of infrastructure in the area, which is one definite positive for the Hawkins Gold Project. Our exploration focus right now is on the McKinnon Zone, the Mckinnon Resource. Eric just outlined that, 328,000 ounces of gold. Again, an at-surface inferred resource. It is NI43-101 compliant. We updated it last year, a year ago, September. But again, it is based on 40-year-old Falcon Bridge drilling. So this is really where the opportunity for Hawkins comes in. The area that Hawkins is situated in is something that we consider an emerging gold mining district. Although it's flanked on the west and east by Hemlo and the Timmins gold camps, both very historic and well-known, world-renowned gold camps, that portion in the middle really are deposits that came online in the last 10 to 15 years. So 26 million new ounces of gold in the last 10 to 15 years. So that's from, as Eric's pointing out there, the Sugar Zone mine, Island, Magino, Borden, Cote. Those all have brought new geologic light to the area, new investor interest and new infrastructure, which can all benefit the Hawkins Project, which hasn't seen a very in-depth geologic look for the past 40 years. So that's sort of why we're very excited about Hawkins in a general sense. So going forward to focus in on that central area there, the McKinnon Resource itself, you can see the surface trace of the resource in red there. It is 3 kilometers long of a 60-kilometer long property package. So the Hawkins property package itself is about 60 kilometers long, 220,000 hectares. So the McKinnon Zone itself, what we did for drilling this past winter was our first drill program. And as Eric said, it was our getting our feet wet program. It was really trying to understand the McKinnon resource better, confirm its location, its geometry, the dips, the structures. But it was also to allow our geologists to get familiar with the geology, the geochemical signatures, the geophysical signatures, so that then we can take that knowledge as sort of a case study of gold on the Hawkins Project and step out away from the zone to try and find new targets. So the Hawkins Project itself, the drilling program was 17 holes, over 2,800 meters of drilling. You can see the Falcon Bridge drilling in gray there, and the yellow is our drilling from this past winter. And we were very pleased with the results of this project, of this past drilling. So I'm going to go forward and show you some results from that drilling. It's the two circled areas. So the cross section on the right is our central area, and the cross section on the left is our western extent of the McKinnon Zone. If we go to the central area here, the drill results, you see some very high grades sandwiched between some very wide mineralized zones. So we can see sort of a 30 gram per ton, 30.9 gram per ton in a 0.5 meter interval within 6 meters of almost 6 grams per ton. So also sandwiched within a very high grade zone. And then on the western extent there, you can again see that similar pattern. There's an 18 gram per ton over a meter, sandwiched within that 14 meters of 2 grams per ton gold. So we hit those high zones, those high grades. That's what we wanted to see. And now we're going to take this next drill program to step out down below and along strike of the resource and chase these high grades down. So Eric, yeah, you can go ahead and talk about those new drill targets that we have.
So one of the things we see, if I back up just 2 slides here, maybe this one here. So this piece of drill core that you see over on the right is one of the gold bearing zones from drill hole number 1 from our drilling. It's basically a silicified sericite schist with disseminated pyrite, as well as highly deformed quartz veinlets and pulled apart and distorted and dismembered quartz veins with actually coarser blebby pyrite. And we do see occasional visible gold. One of the characteristics, these are one of the characteristics that we like to say that compare favorably to a Hemlo style of mineralogy and mineralization. A wide anomalous zone with 1 plus half-gram gold surrounding higher grade zones within that zone. So it's in the mineralogy is consistent with that. The style of pyrite is consistent. The host rocks are consistent. We have a strong deformation zone that this is hosted in at the contact between a granitic rock and a metavolcanic rock. So there's a number of similarities. Now we're early days. Really the results of that analysis are still a ways away from being confirmed, but we think there's so many similarities that we like to comment that it's sort of a Hemlo lookalike. But regardless of, at the end of the day, what we want to do is find a big gold deposit, and we need to know whether this 328,000 plus ounce gold inferred resource that sits at the surface from 0 to about 150 meters can grow bigger. And to that end, we're satisfied now that the Falcon Bridge drilling was fine and good. We've confirmed a lot of what they've done. There's still more to do in that regard, but we don't want to let the grass grow under our feet here too much. We want to try and see, does the McKinnon Zone have the footprint of a sizable gold deposit? So here we've superimposed the McKinnon Zone at the same scale of the yellow zones, which are the Hemlo gold mine, what's been produced at the Hemlo gold mine, which is actually 140 kilometers away from the McKinnon Zone, but we've made them same scale. You can see the Hemlo mine has been active down to almost 2,000 meters depth, whereas the McKinnon Zone is technically just scratching the surface. So one of the discussions out of the Crescat. So Crescat, in our $5.6 million financing, Crescat led the way with $1 million investment. They decided early on, basically by seeing that drill core that I just previously showed you, that yes, this is a worthy target to spend some money on, and they wanted to take a 10% stake right away in the company as part of this financing. Ultimately, they committed $1 million, which is slightly more than 10%. In any case, they came up with the idea, which we liked very much, of drilling a series of holes targeting the McKinnon Zone at 500 meters depth, and that's these red dots around here. So it's 12 holes that run the length of the McKinnon Zone. We've actually completed one of these holes and are waiting for assay results from one of these central holes here. We will be drilling this as part of our drill program going forward. Probably will not be able to complete that whole program until the winter time. We have one drill rig turning now, but we are adding a second drill rig later in August. But each one so far, each one of these holes, the first hole anyway of these deep holes, took about 10 days. So it's a long time. We're bringing a second drill rig to speed up that process. In any case, some of these targets at depth, we'll have to wait till winter to drill anyway, because of on the surface they may be located below bogs. You can see the other part of the program that we are intending to step out and drill are a little closer proximity to the McKinnon Zone, both along strike to the west and to the east, as well as below some of the higher grade zones. We've actually done one hole in each of these 3 circles prior to our moving to the deep hole. So we have four holes completed right now, and we're ready to get back out drilling. The drillers are arriving after their break today, so we'll be ramping up drilling. So that's our big effort, is trying to test the McKinnon Zone in the near term to see, does this have the footprint that we need to see to form a sizable gold deposit. As you can see, the spacing of these red dots, if we drill all them, and if there's a sizable gold deposit like a Hemlo down there, then you'll hit, you know, at least some of those things. So that's the rationale for doing that. In addition to those, now this is a surface map of the main, our central 15 kilometers of our project. The Hemlo, or sorry, the McKinnon Resource is shown in red. The 3.5 kilometer stretch along this this zone. It's superimposed upon the magnetic map from the AeroMag survey that we completed last fall. We are, in addition to this McKinnon Resource focused drilling, we have a number of other activities on the go, and these are all aimed at producing new drill targets for the future. So we've already got targets that are going to take us through the winter, and I'll tell you even more about those as we go along. But at the moment, we are doing other things. So we have a full geological, 3 geological crews, as well as a full prospecting crew out. They've been focused mapping and sampling and prospecting in the east part of the McKinnon Zone. They've just completed the western zone, and now they've moved out into the far west of this zone as well to try and help get a better handle on this property for future drill targets. These golden dots here are high-grade prospects that they are investigating further, and some of them are just historical historical nature, and they haven't had a lot of work on them. In the case of Goldfields, there have been a few groups out there. The point is we're trying to develop new targets that'll be good for testing with the drill rig in the future. In addition, we took this airborne magnetic survey and we shipped it off, shipped all the data off to a geophysicist. All geophysicists all over the place are quite busy these days, like everybody in the industry. To a geophysicist who had worked with Rio Tinto and as well as with Robert Friedland's group for a number of years in Africa, the platinum group that he's got going. So quite experienced at interpreting aeromagnetic data, magnetic data in particular. And he's come up with a number of new targets that are his favorites. In addition, he's come up with, by doing his mathematical calculations and filters, he's been able to remove the remnant magnetism from these rocks, from this data, I should say, and shift it out to getting to the basics of the magnetic, the rock magnetism as might be expected by alteration and or parent rock controls. So we're using his data to come up with targets. He is, I should say, and he's come up with a number of half a dozen targets or so, not even along the McKinnon Zone, to the north of the McKinnon Zone. So these are other tools that we're using to develop targets. He has also, in addition, reinterpreted the McKinnon Zone through the alteration that he sees by removing the various magnetic filters that he deals with these things. So we're learning a lot, and these are things that will help us go forward in trying to identify drill targets beyond the McKinnon Zone. So we have a lot to do, and here's a summary of that really process, our activities. This is the whole property package outlined in black here. You can see the long narrow portion of this is the options portion, the location of the McKinnon Zone right here in red. The big bulbous mass of claims here over on the west are claims we staked, Ellie and I staked actually after we optioned this property from a private company. Again, our main focus, main money being spent right now is in and around the McKinnon Zone as previously discussed. We will embark this fall on a big airborne magnetic survey here covering all these claims over here. We like this area, at least from a geological point of view, because it's complex. We have a fault zone or shear zone coming up this way, plus the main shear zone coming down this way. The confluence of those two shear zones mean to me that this is a very complex and complicated geological area, a good place to be looking for gold deposits. The other aspect that we like about this is that it's in the shadow, and the green rocks are metavolcanic rocks. These pink rocks over here are granitic rocks. It's in the same sort of environment as the Hart Gold Sugar Zone mine, which is on the other side of these pink rocks to the southwest. So there's a number of reasons why we like this. Again, all to develop future drill holes on this project. Mostly drilling, prospecting, mapping. We do have some trenching going on right now. We have a bulldozer as well, trying to extend the zone to the west. So that's what we're working on in addition to the drill holes. And at some point, we'll go down this long, narrow stretch here and provide some mapping and prospecting as well before the snows flies this year. So again, a lot of activities going on. We have drilling going on right now. 2 drill rigs will be turning by the end of the month. We'll have a third. We're actually looking at adding a 3rd drill rig by winter time. We don't want to do it now because we do think the boggy nature of some of these areas are going to prevent us from getting into until winter anyway. So we have a lot of activities. The money's being spent wisely, and we have future drill targets that we're developing at this point as well. So that's really the whole spiel. We'll happily take questions, answer any question you have. Fire away.
Okay, thank you very much. Could you run through the conceptual mining methods and process flow sheet?
Can you repeat that, please?
Could you run through the conceptual mining methods and process flow sheet?
Well, of course, would be very conceptual. Right now, it's a fairly early stage exploration property, even though we have this anchor resource for us to focus our efforts on. We're still early stage on this, and we're looking at trying to expand that. And if this doesn't expand, then there's no we've got to rethink all of that. However, we've got a lot of exploration activity going on at this stage and a lot of drilling going on, and we're in a known gold-bearing region. And in my experience, it seems to me that anytime you get a drill rig out and you undertake a well-thought-out program, there's good opportunity for discovering more gold. In terms of a conceptual mining situation, if it ever gets to that point, or when it does, I would imagine there would be some combination of open pit mining, because we have a shallow near surface resource at this point. The current resource, 328,000 ounces of gold, is all in the upper 150 meters at this point in time. If this thing's going to grow to something much bigger, then given our knowledge of Eastern Canadian gold deposits, we have to drill deep and try to see what's at depth, as most Canadian gold deposits, most mineral deposits in general, are elongate in the vertical sense. So if this thing is going to go to 5 or 10 times its size, then we have to assuredly have we certainly need to have some success at depth in this drilling. Having said that, a mining camp or a mine like Hemlo had this sort of amount of discovery in the prior 30 years until its major discovery hole was first drilled. You know, its big discovery hole was drilled long after others had been prospecting, and even had proven a small resource a few kilometers away, a couple of kilometers away. So for all we know, the main resource, if we find it, when we find it, could be somewhere else on this project. And these are early days.
When do you think you might have to come back to market? What was the cost of?
So we think the current current program that we are undertaking will probably spend, and this will take us until winter time, no doubt, until mid to late winter anyway, we'll probably spend half of what we just raised. So we're sitting pretty well. I mean, we can, if we start seeing success, we could ramp up and comfortably ramp up without even having to go back to market right away. And secondly, if we can get some decent results, we could actually see the share price start increasing and might see some of our warrants started getting exercised as well. That's the hopes.
And I guess managing the tension between putting an updated resource out and just keep drilling because we can make our own resources in our head. How do you handle that?
So I think the most important aspect from our philosophy is the first steps is to try and decide whether there's a footprint here that is going to see this project grow. If this project can grow bigger, then we can start building the resources through infill drilling from the holes that we have drilled that are making the volume bigger. So we're going to have to no doubt make the volume bigger, both at shallow and along strike, but also at depth. And then we can start filling in to provide enough data for resources.
When do you expect the assay results from your current drill program to be published?
I imagine September time. Like everybody else, assays are slow going. We have completed, like I say, 4 holes. We'll be starting hole number 5 in the next day or so. So there are 4 holes where samples are in the labs now. So given a 6-week turnaround time as a routine turnaround time, and we have a pretty good lab that has been fairly reliable about that 6-week turnaround time. I would expect to see probably early September for some of these results to start getting to us. So September will be the first time we start releasing results.
Eric, you and your team are accomplished geologists in your own right. What does Quentin Hennig, the geologist from Crescat, bring to the table, and how involved will he be in input and helping you find the gold?
I think he'll be very involved. I think we already have met with him a couple of times. We've shown a good rapport with him so far. He's come up with some great ideas, and these are ideas that when he thinks of them and we talk about them and discuss them, we are usually quite excited by them. He's knowledgeable. He's very knowledgeable. He's seen a lot of gold deposits in his career all over the world, and brings a lot of experience in not only the geology of these things, but how to go about finding them, how to run a company that finds gold deposits. So I think all of that is important to our activities.
Before I hand you over to our geologist and engineer, could you go over your required payments to reach 100% ownership?
Yeah. So every year, we've already completed year 1 of this. Year 2 anniversary will be January, end of January. We have to every year for 5 years. So for 4 more years, we have to pay $200,000 cash, issue $200,000 worth of shares, and complete $500,000 worth of exploration annually. So that's a total of $1 million cash over 5 years, $1 million worth of shares over 5 years, and $2.5 million of exploration over 5 years.
Okay, thank you. And any royalties associated with the properties upon reaching 100% ownership?
Yes. So fundamentally, it's a 2% royalty over the optioned properties claims. It's a little more complicated than that, but with buy downs, because there's some underlying historical royalties with buy downs and everything, it's tantamount to 2% NSR. And we can certainly send anybody that's interested the details.
Thank you very much. Adam Graff, it's all you.
Thank you, Campbell. Eric and Allie, thank you very much. It was a great update today on what you guys have been doing. Couple of questions. One, Eric, I'm super interested. You mentioned it a little bit about the history of Hemlo, and maybe you could just expand on that a little bit as far as the initial shallow drilling at Hemlo, the kind of grades they got, what they started out as, and then how they hit their discovery hole, and maybe tell us a bit more about what you're calling their discovery hole.
Yeah, I'll do my best at that. So they had been explored. So the discovery hole was discovered in 1981-ish, as I recall, to the best of my ability, early 1980s anyway. And I think it intersected, I can't remember the exact grade, but it was on the order of something like 8 meters of 10 or 11 or 12 gram material, maybe even 14 gram material. So that was the thing that sort of set off the gold rush there, so to speak. And that hole was hole number 80 or something like that in a series of holes. But even if we back up a bit more prior to that, so companies have been smelling smoke around there and getting 1 to 2 gram material, even up to 3 or 4 gram, even something similar to what we've been getting, up to 5 or 6 gram material over a few meters over the preceding decades, over the preceding 30, 40, 50 years, such that they had even identified a resource. Of course, 43-101 didn't exist back then, so it would have been a resource calculated by one of the exploration companies of the day, and it was of the similar nature. It would have been a shallow resource, and it probably, I can't remember, to be honest. I'll look it up after we're done and email it out so we can send it out. But it was a smallish resource on the order of 150 or 200,000 ounces of gold, with a grade of probably somewhere 2 or 3 gram material on the surface. So it was a modest thing, not enough for anyone to go after and even mine, because in those days, back in the mid 1900s, people would mine a 200,000 ounce deposit if it was a high enough grade, or even 100,000 ounce deposit if it was high enough grade. So it sat there and was known about for like I say, 40 or 50 years. And so it wasn't until this discovery hole and in the early 1980s, I believe it was a fair bit deeper than preceding drilling. I believe it was in sort of the 300 to 400 meter range. And they got that set off a staking rush, and then the rest is history, so to speak. Initially, I think the deposit was probably a 4 or 5 million ounce deposit, and subsequently, of course, over the years, it has seen 24 million ounces of gold mined down to about 2,000 meters at good grades, variable grades depending on which owner you are, because it was owned initially by 3 owners and was subsequently consolidated. And the current owner, Barrick, has produced various maps, and historically a lot of cross sections been produced as well. But one portion of it was an average of 6 gram per ton. I don't have that slide here at the moment, but average grade was 6 grams per ton in one zone, and another zone was 13 grams per ton, another was 10 grams per ton. So there are variations along the strike of the thing. So yeah, it's an interesting discovery, and actually it's an instructive discovery on a lot of, for a lot of reasons and for a lot of gold deposits, as people go in and relook at things and reinterpret the geology. So it's a good lesson for everybody, that sometimes you got to persevere.
Okay. Can you also give us a little bit of background about the Hart Gold discovery, that's directly west of you guys. And I believe it's all underground, at least the mining that they're doing is all underground. Do they also have lower grade open pitable material that they're just not focusing on?
You know what, I don't know the answer to that last part of that question, whether they do have some low grade open pitable material. Their mineralization and alteration is not quite as obviously similar to Hemlo as the McKinnon Zone is. Of course, the reason why we named it the McKinnon Zone is after Don McKinnon, who one of the co-discoverers of Hemlo, came in after the Falconbridge drilling, a decade after the Falconbridge drilling, and staked the claims, and his estate owns the underlying NSR on it. So the Hart Gold Sugar Zone mine is actually a little different, at least from that point of view. It's more similar to traditional sort of orogenic deposits in Eastern Canada, in the Eastern Canadian Shield, and tends to be, it's in the halo of a major granitic pluton. It's hosted in mafic volcanic rocks. In this case, these mafic volcanic rocks are high-grade metamorphic rocks, as you can see from this photo here. They're high-grade metamorphic rocks, as are ours, amphibolite grade, and they have an alteration characteristics that are more similar to the traditional Eastern Canadian orogenic gold deposits. Hemlo and a few of the other deposits, like the Gold Court mine in northern Quebec. I'm trying to think Quebec. If somebody help me there, I'm trying to pull that one out of the air.
Eleanor?
Yeah, Eleanor. Sorry, I'm trying to think of too many things here. Eleanor and the Bousquet mine in along the Cadillac Break in western Quebec. Have similar sorts of styles of mineralogy and mineralization that Bousquet being at a lower metamorphic grade than Eleanor or Hemlo, and in our mind McKinnon. So Hart Gold is a little bit more like the other deposits.
Eric, do you want to go up a slide to the regional geology slide? I mean, it's good to note here too, with that distinction in geology, that our property package is very large, even though it's one property. And the geology of the McKinnon Zone is the Hemlo comparison, but you can see the geology start to change as we get towards the Goldfield prospect. And so this setting in the Western claim blocks is really what we're looking at as being potentially similar to Hart Gold, because Hart Gold sits in a very similar interface of geology and right up abutting that Strickland Pluton, just sort of on the other side of the Pluton. And we start to see a geologic change in our property there as well. So we're kind of looking at that Western claim block as something quite unique to the central McKinnon Zone area, and potentially more similar to Hart Gold. We're not sure yet, as I pointed out earlier, it's a very early stage, that Western claim block, but as Eric was mentioning, the confluence of those two shear zones creates a really interesting geologic setting for us for that Western claim block, but unique to the McKinnon Zone.
Now, remind us how you guys are attacking that Western Zone, recognizing that it's still early stage now, and you're doing spending most of your money at McKinnon.
So fortunately, that Western claim block edge kind of sits on a lake, so there's a lot of good outcrop. The western edge of our claim block there really kind of follows that lake. So it's a really perfect setting for initial mapping and prospecting. There's a lot of outcrop there. So we're sending the mappers out this fall to the southwestern area of that Western claim block. But as Eric said as well, we're going to be doing a large airborne magnetic survey on that entire Western claim block. And so in combination with mapping and prospecting, that'll give us some really good focus for drill targets on that Western area. It is early days, but we're really interested in it. It's a very exciting prospect, claim block for us.
Yeah, and I might add that it really is virgin ground. I think in all the years that Canadians have been up here prospecting and mapping, if they've touched much in this ground, there's only been one company that drilled 4 or 5 holes down here in this far corner here. The rest of it really is just virgin territory. So it's just waiting to have somebody have a decent look at it at this point in time.
And just switching topics a bit, getting back to details around McKinnon, can you just go into what your drilling costs have been on a per meter basis, you know, kind of all in, and then also, you know, what kind of drill spacing have you guys been using to get to, you know, to inferred resource, both for, you know, open pit and underground, you know, open pit constrained and underground, presumably underground constrained?
Yes. So sorry, what was the first part of your question?
All in drilling cost per meter.
Yeah. We're using our first round of drilling was about 225 all in.
US or Canadian?
Canadian. And so we're sort of using that. That's probably a bit higher than what we're using when I was back in Val-d'Or, but everybody's busy. It's still pretty good price at this point in time. In terms of drill spacing for the near surface stuff that I would envision would be interpreted as potential open pittable material. There is some spacing that's 100 meters, not that's 100 meters. That needs more spacing. I would look at 50 meter spacing as a likely spacing if we want to get it really more formally moved into a from an inferred to an indicated. We'd need to look at 50 meter spacing. And there's actually a lot more. There's a lot. Let's put it this way: the drill spacing is very heterogeneous along the zone, along the trend. Some of the higher grade zones have much closer spaced drilling, as little as 30 or 40 meters, and some of the lower grade zones have 50 to 75 to 100 meter spacings. So we would need to, for a more serious, better, more reliable number, we would need to close the near surface stuff down to 50 meters as a next step. And then we would need to go underground. I think we're too early to start talking about underground, but we do see gold. There is some nuggety effects here, due not only to the style of gold mineralization hosted in some of these deformed and pulled apart quartz veins, but from the fact that these quartz veins have been deformed and pulled apart in the first place, has also created its own further nuggety effect in certain regards. And so when it gets time that we actually start going deeper than we have now, then and we start hitting, then we're probably going to need a serious, very detailed drill targeting plan. And that means drill spacing will have to be probably in the neighborhood of 10 to 15 meters.
But we're really at the stage right now trying to increase that.
Yeah, you know, just to make inferred, would you say it's a good rule of thumb that underground needs to be half the spacing of open pit?
At least, yeah. Yeah, probably just to make inferred. Yeah, I think you'd want to see. And I know that some people do inferred and they might throw a polygon around a single hole, but you know, that's, you know, until you follow up with that hole, you can't be terribly confident about it.
I'm just trying to get an idea that if you guys were trying to really build some tonnage, you know, you know, where you were lacking drill spacing in the known ore zones, you know, what kind of program, you know, would that be? I know that's not really the focus right now, but maybe that'll be a focus, you know, going forward.
Yeah, I mean, I would say something at least 25 or 30 meters max. for underground. You might be looking, even at for inferred, you might be looking at something closer to that.
Okay. Well, with that, let me pass it back to Campbell to see if there's further questions from the audience.
And let's not forget Artie.
And Artie.
To what extent did management and insiders participate in the most recent financing?
Ellie, do you have that off the top of your head? I don't have that off the top of my head.
They came in for about 400,000 shares.
Okay. Thank you. If anyone has any questions, please just put them in the question pane of the GoToWebinar control panel. Artie, do you have anything that you want to ask before we close?
Thank you. Just a quick question. When we look at your 2020 technical study and the recommended budget and the proceedings there, what portion of it you were able to complete this year?
We have, well, before the end of the year, we will have probably completed all of it. We have completed most of the drilling, and we're still working on some of that drilling now. So I would say that we'll have it done certainly within the 12-month period. We've sort of developed new targets and have gotten sidetracked from completing all of that as we've gone through the last few months. But it should all be completed before the end of the year for sure.
What is the average drill hole length for the past and current drillings? I'm wondering when we look at this plus 3 kilometers strike length, what portion of it you were able to get down more than 150 meters?
So the average length of drilling for the first drilling program, which was pretty much all shallow, was probably in the neighborhood of 200 meters. We were testing targets around the 100-meter depth, and normally, if all you're doing is testing 100, whatever target you're testing, you usually once you get through the target, you drill 20 meters and then you stop. And of course, we're drilling at an angle across this zone, so testing a 100-meter target normally will probably lead to a 150-meter long hole. So we did drill a couple of deeper holes out to the east, which would have increased the average length. If you exclude those couple of deeper holes, the average length was probably 150 to 175 meters. The current program, however, is much deeper. Our plan is to test potentially 12 holes intersecting a target at 500 meters. We're estimating that each one of those holes to be about 650 meters long on the incline to get through that 500-meter zone. And so our average depth is going to be closer to 600 meters when you include that and some of the shorter holes we're doing. Excuse me.
Has anyone before you drilled that deep?
At this property, Falcon Ridge actually drilled 2 holes back in the 1980s that were 700 and some odd meters long. So they were probably trying to intersect the target zone at about a 600-meter depth, maybe, or 650 meter, or sorry, a 550-meter depth, something like that. We don't know why they were drilling those holes. We don't know what they targeted from. We have not found any evidence to explain why they were testing those targets. We don't know what they hit in those holes. We don't have the drill core for those holes, nor the drill logs don't indicate assay results. So they would have been drilled after their main program.
Thank you,
And
Eric.
even if they didn't hit anything, we think that drilling 2 holes under a 3.5 kilometer stretch of ground is not adequate testing.
Yeah, it makes sense. Thank you, Campbell.
Great. I think we've kind of reached the top of our hour, and this is a great post financing kickoff. Now the truth is in the drill bit, so to speak. So if anyone wants one-on-one meetings as an investor, please reach out to discuss that. Otherwise, we're going to keep them busy on the ground. With that, I'm going to close it, pass it back to Eric and Ellie to close us, and also to ask that when you do log out or we close, please share your feedback either here or in the email. And the replay will be available in about an hour at amvestcapital.com/replays. And you can follow E2Gold and Amvest in the usual social media places. And I'm sure there'll be some interesting news releases over the next many months. Eric?
Yeah, thank you. Ellie, would you like to say something first?
Sure, just that, we have a lot of activities going on, a lot of things to support our drill programs that are not just drilling, so keep an eye out for news. I think we have a really great management team and we all share a lot of energy and drive for this project. So I think it's a really great time to get involved, and we're very happy to set up meetings or have any set up meetings to answer anybody's questions.
Great, thank you. And
Yeah,
for those of you in the sector, sorry, Eric, but you will be at Beaver Creek at the summit, so there, so you can find them in person. Sorry, Eric, go ahead.
No, I'm just going to say, yeah, thank you. Well, I was just going to say, anybody has any questions, please send them, email them to us, contact us, or via Amvest. That's fine. We'll be happy to sit down and answer anything that you may have. And thank you again, Campbell and Adam, for putting us on here.
Thank you. Good day, everyone. Cheers.
Bye-bye.